Most people think dividend investing is boring, slow, outdated, and then a year like 2026 happens. As of right now, SCHD is up 13.9% year to date, while the S&P 500 measured by VU is up just 0.56%. That's not a rounding error, that's not cherry picking, that's a massive gap, and it's happening quietly. No hype, no headlines, just results. If we haven't met yet, my name is Steve. This channel is about building real wealth and financial independence. I focus on creating passive income that actually works, not get rich quick hype. Now, what's happening with SCHD right now doesn't mean it's suddenly turned into a growth ETF. What it means is that the market is rewarding cash flow again. When growth slows, when expectations reset, and when volatility rises, money rotates towards companies that actually produce profits and pay shareholders consistently. That's what SCHD does best. So today I want to talk about why SCHD is beating the market so far in 2026, whether I expect that to continue, and then I want to walk you through something far more important than short-term performance. I want to show you what it actually looks like to retire with SCHD. Not in theory, not in vague percentages, but in real concrete income levels. From the moment SCHD pays your first $100 a month all the way to replacing a full-time income, and I'll show you exactly how many shares it takes to reach each level. Before we talk about retirement, let's clear something up. SCHD doesn't win every year. It's not designed to. In roaring bull markets driven by speculative growth, SCHD will often lag. That's the trade-off. But when markets rotate, when investors care more about durability than dreams, SCHD shines. So why is SCHD outperforming in 2026? First, we're seeing a rotation away from crowded growth trades. The same areas that dominated 2024 and 2025 are no longer getting rewarded the same way. Second, cash flow matters more when economic growth slows. Investors want certainty. And third, SCHD focuses on companies with long dividend histories, strong balance sheets, and real earnings, not promises. SCHD isn't exciting, it's reliable, and reliability is what builds retirement. Now here's where this gets interesting. Most people think retirement is one big leap. You either work or you don't. But dividend income doesn't work like that. It builds in layers, quietly, gradually, and each layer changes how money feels long before you ever stop working. I call this the SCHD Freedom Ladder. Let's climb it. But before we do, one very important clarification. All of these levels are based on today's dividend payout. Dividends grow over time. That's one of SCHD's superpowers. But for now, this is the baseline. Also, each rung we're going to talk about is standalone. We're not stacking expenses. We're isolating what it takes for SCHD to cover one meaningful part of life at a time. The first level isn't retirement. Let's instead see how much SCHD you need to own to earn $100 a month in passive income. At today's price, around $31 per share with an annual dividend of roughly $1.10 per share, $100 a month in income means about $1,200 per year. To generate that, you'd need roughly 1,100 shares or about $34,000 invested. That might not sound life-changing, but emotionally it is, because this is the point where SCHD starts paying for something real. Your phone bill, your streaming subscriptions, your gym membership, groceries for a week, one recurring expense that simply disappears. That is the proof of concept. The next rung is where stress starts to drop. Let's say you want SCHD to cover your basic utilities, electricity, water, gas, roughly $350 a month, or $4,200 per year. At that level, you're looking at about 3,800 shares or roughly $120,000 invested. This is the point where SCHD keeps the lights on, literally, and that matters more than people admit. Because when your essential bills are covered by passive income, job stress hits differently. Emergencies feel smaller, inflation feels less personal. This is bills on autopilot. Next comes one of my favorite milestones, the car payment. The average car payment in America sits around $600 a month or $7,200 a year. To cover that with SCHD, you need roughly 6,500 shares or about $206,000 invested. This is the moment where an asset you own, not your job, pays for something you drive every day. No paycheck required, no overtime, no stress. This is drive for free territory. And once you experience this once, it permanently changes how you think about money. Now let's move into family level impact. Groceries. For a typical household, groceries can easily run $1,000 a month or $12,000 per year. To generate that with SCHD, you're looking at roughly 11,000 shares or about $343,000 invested. This is a level where dividends stop being about you and start being about stability for the people you care about. This is family covered. And remember, groceries inflate every year. SCHD's dividends have historically grown every year also. That means the shares you buy today don't just pay you now, they quietly cover more of your life expenses later on. Now we reach one of the most meaningful milestones on the ladder, the house payment. The average mortgage payment in the US right now is around $2,200 or around $26,400 per year. To cover that with SCHD income, you need roughly 24,000 shares or about $755,000 invested. This is where life changes when your biggest monthly obligation is handled before you ever even open your laptop. Money stops being the central pressure in your life. Work becomes optional earlier than expected. Risk tolerance increases, anxiety drops. This is shelter secured. Now let's talk about the level everyone asks about: not covering a bill, not easing a little pressure, replacing a full-time income. The average American earns roughly $66,000 per year, or about $5,500 a month. That number represents more than a paycheck. It represents your time, your schedule, and how much freedom you actually have in your life. To replace that income entirely with SCHD dividends, based on today's payout, you'd need roughly 60,000 shares. At current prices, that's about $1.9 million invested. And this is where the conversation changes. This isn't retirement in the traditional sense. It doesn't mean you stop working tomorrow. It means work becomes optional. You can keep your job, downshift, consult, take time off, or walk away entirely because your income no longer depends on a paycheck. Now here's where dividend growth changes everything. If SCHD never raised its dividend again, this ladder would still work exactly as shown. But historically, SCHD does grow its payouts. That means over time, the same number of shares covers more bills, more expenses, and eventually more of your life without you adding new money. That's why many people don't need to reach every rung by buying more shares. Sometimes the ladder rises to meet them. And here's the part most people miss. This doesn't require predicting the market. It doesn't require perfect timing. It doesn't require winning every year. It requires consistency, patience, and letting time do the heavy lifting. Now I want to pause here because there is a danger zone. The biggest mistake people make when approaching dividend income is spending it too early. Pulling income before the snowball is fully built. Letting lifestyle creep, slow compounding. SCHD works best when dividends are reinvested during accumulation and intentionally deployed later. Income first, spending second. Here's the big picture. To earn $66,000 from a job, you need a boss, a commute, a schedule, and constant effort. To earn it from SCHD, you need shares and patience. SCHD won't make you rich overnight, but it can make you financially unbothered as time goes on. And that's the real goal. My goal isn't to beat the market every year, is to build income so stable that the market years stop mattering. If that's how you think too, you're in the right place. If this breakdown helped you see dividend investing differently, hit that subscribe button. I post videos like this every week, breaking down real long-term strategies for building passive income. And if you want to go deeper, I put together a free SCHD info sheet on my Patreon. It walks you through the fun, the income ladder, and how dividend growth changes the math over time. I also share my $5 a day SCHD investment, showing the actual share count, how the dividends have grown, and what this looks like in real life, not just on paper. You can find that link in the description below. Finally, let me know in the comments which rung of the ladder you're on right now. I read every single one. And if you're not sure what to watch next, check out another of my videos right here. Take care, and I will see you next time.